right, guys, welcome to the Imperial Wealth Crypto Chronicle podcast. A few of you would have been listening to us probably early this year, end of last year, Mitch.
Yeah. I think towards the back end of last year and probably start of this year is when we're doing a lot of the podcasts. But
yeah, had them mostly going through YouTube, and this one's going to be launching on Spotify after big amount of requests. It seems to be where people are tuning into when they're driving the car, whatever it is. And yeah, we want to bring crypto news to you right at your front door and easy to understand. So I'll basically go through why we're calling it the Crypto Chronicle. We're building a bit of a history book here. Every week we're going to be giving you all the insights of fundamental events that are happening in the cryptocurrency market. We're also going to touch into some technical analysis, mostly Bitcoin, Ethereum, bit of altcoins, of course. And a lot of you will know we're big into the crypto mining, so we'll be giving you insights on crypto mining, which, would you agree, Mitch, is probably something that's not really well reported across the landscape?
Yeah, definitely.
So we'll give you insights on that, and let's get straight into it. So, Mitch, do you want to give yourself a bit of an introduction for the audience?
Yeah, so I'm Mitchell. Some of you probably from the community know me as AC Dix or maybe a couple of other aliases, but I'm Chief Research Officer of Imperial Wealth on the crypto side of things. So responsible for running mainly the content, research and trading side of things. We've got the Trading Academy, which is for a lot of our keen investors into cryptocurrencies. It's been running since pretty much the last bull run, and then obviously we've experienced the recent deep bear market. Really all that is us investing and dollar cost averaging into cryptocurrency projects and tokens that we think in the next bull run will perform very well. Mm-hmm. And then amongst that as well is the new Day Trading Academy and Day Trading course that we've launched, because obviously the market, when you're investing, I remember we did a lot of investing last June to September at the bottom of the market for Bitcoin. And obviously, across the next 6 months, as you watch prices go up and stuff, you're doing a little bit of investing here and there. But we wanted to release a service that allowed people to, trade on the assets day to day, even hedge against their own portfolios through shorting, and really just to teach people a lifelong skill as well. So yeah, that's mainly what I do.
Yeah. It's been really awesome. I mean, the community is really thriving on that side. All the students that got on board for that day trading course, feedback's been phenomenal. And yeah, it's quite awesome to see people not only be able to make some profit whilst the market's going up, but benefit when the market's going down too. So, all right, well, let's jump straight into it. So one of the bigger things that pretty much everyone, even outside of the cryptocurrency industry, is probably aware of at the moment is the BlackRock ETF.
Yeah.
So we'll go into a little bit of detail of what that is, what our thoughts are on it. But there's been some recent announcements come out on the SEC. Mitch, do you want to tap into that a little bit? Yeah,
so just for those at home that don't know what an ETF is, it's essentially just a type of investment fund that kind of trades on stock exchanges. It's kind of like a individual stock, but with the Bitcoin ETF, essentially what that is essentially saying is BlackRock and these other big traditional institutional firms will be able to offer it, in different forms of ways to their traditional clients to expose them to Bitcoin without, the custody of it and whatnot. And they're able to get exposure to the price movements of Bitcoin in a very more regulated way, I would say, because it allows them to get, exposure to Bitcoin rather than holding it in a wallet or on an exchange or whatever. They're able to invest in it through BlackRock. And think of, from an Australian perspective, think of it of things such as superannuation. People might be able to use their self-managed super funds. I think in America it's called 401, something rather.
So, yeah. It just opens massive doors, doesn't it?
Yeah, and for those that don't know who BlackRock are, I think they are currently...
Own America?
Yeah, they own America, but I think they operate something like 9 trillion or 10 trillion in assets. And so essentially what this ETF will do if it does get approved in Bitcoin and cryptocurrency terms is it'll allow for a lot more increased adoption, number one, because traditional clients will have access to it through those types of formats. Obviously, given the volatile nature and how Bitcoin does move on price, it'll obviously inject a lot of liquidity and impact the price. Most people think positively. I think that's probably a reasonable assumption, definitely at least over the long term.
For sure.
And I think probably the most important thing here is the regulatory attention and investor protection, because that's always kind of been the knock on Bitcoin and cryptocurrency, is that, you know, it's not regulated yet. Investors are getting, you know, stung here and there.
Especially after FTX, right?
Yeah, especially there.
Really scared off a lot of institutional side of investing. So yeah, massive, really important to have that regulatory attention and background. I was going to say early days, you know, I saw some statistics come out on when BlackRock have applied for these types of movements that have almost 100% success rate. I think a lot of people in the crypto market kind of are almost expecting this to definitely happen. Do we think it's a definite thing?
I think, just to touch on your point, I think there's something like 595 and 1 or something out of 596 applications. So I think, given that this is happening on Saturday, the decision is due, I think, Friday US time. I think a lot of people are expecting that the decision will be delayed and the SEC will kind of kick it down the road until, you know, a bit more happens. But I think the assumption is that it will happen. And because even if you revisit what the SEC are trying to do now, they're not actually trying to attack Bitcoin. If you go through their cases against Coinbase and other things, it's to do with unregistered securities in terms of altcoins, you know, your Solanas or your these other things, but they've never brought a case against Bitcoin because of its decentralized nature. It doesn't have people doing ICOs and offering unregistered securities to institutional clients. So it's probably a safe assumption that a company as big as BlackRock will get this over the line with the SEC. I think definitely at least in the long term, maybe not this week, but you can probably expect it by 2024, I reckon.
Yeah, absolutely. I mean, it seems like it's going to happen. It needs to happen, in my opinion, for all the reasons that you mentioned, both regulatory and just opening this market up to those, you know, super funds, everything else along the lines of it. But that's really good. And so another thing that's been happening in the market, we've seen a lot of kind of PayPal, Twitter, all these payment gateways, which will also open up a huge amount of, you know, liquidity and transactions coming into the cryptocurrency scene. So let's tap on Twitter here. So we've got Twitter. They've integrated through Solana. Is that correct?
No, Twitter, that's us PayPal, but Twitter, what's happened with Twitter, which we should probably refer to as X from now on,
yeah,
but
true.
Formerly known as Twitter. Obviously everyone is very aware that Elon obviously owns Twitter now and operates as, I think, not CEO anymore, but chairman or whatever it is. But just to touch base quickly on the background of, you know, firstly, Elon, most people know, he's always been a staunch supporter of Dogecoin. I think earlier this year, he made the logo of Twitter for a couple of days. Dogecoin logo, or the Doge from that.
He loves his breadcrumbs.
Yeah, and then Twitter also this year, I'm fairly sure they allowed NFTs from OpenSea and whatnot to be your profile picture. So they integrated NFTs, obviously, which comes from blockchain and crypto as well. So they've been warm to the idea of crypto, but people were kind of just always assuming, he'll bring on Dogecoin eventually as the currency or Bitcoin, whatever. But it wasn't until this week on August 28th that Twitter actually from the Rhode Island currency, got the Rhode Island currency transmitter license, which allows them to offer virtual asset related services on behalf of users. And obviously the massive thing here is with the attainment of that license, you know, over 400 million people use Twitter and can now potentially in the future access crypto trading. So
yeah, it's massive, isn't it? I mean, like when you see these types of things, I mean, just not long ago, it was reported that SpaceX had sold their Bitcoin, right? And the effect that it has on the market is just so big. It's almost like Elon controls it to a degree. Then this comes out and, you know, Twitter, or X as we're calling it now, is looking to have some sort of roadmap to accept crypto payments come on. Again, massive news. So just on that quickly, I think before we move on to PayPal, funnily enough, is, if you didn't know, Elon was one of the founders of PayPal. And I think given that was his background, that was his big first thing that he sold before he moved on to Tesla and other things, was that people are believing that he's trying to turn X into a financial services platform much like PayPal, but as a social media platform too. So
It'll be really interesting to see what he does with it in the future. But I think you can probably bank on at some point, once again, not immediately, but at some point, him integrating cryptocurrencies one way or another into it.
Yeah, and on that, there was that comparison to things like WeChat in China.
Yeah,
he's trying to kind of create that ecosystem. Now, I said there, I meant to say Shopify, of course, when I was talking about Solana Pay, not Twitter. So we've got Shopify looking to bring on this Solana Pay, which is really cool. I like that they're doing that. Shopify, I think I saw some statistic there around 10% of e-commerce purchases posted through Shopify. So bringing in a crypto payment solution, that's absolutely awesome.
Yeah, so I think the big thing here that we all know is the massive benefit of blockchain technology is how cheap transactional fees are compared to traditional, your Amex or your MasterCard and your Visa. So I think the statistics are something like, it'll typically range from 1.5% to 3.5% for credit card processing fees, whereas the average network Solana fee is about 0.00025 cents or dollars, however you want to put it, per transaction. So I think, for an industry that equates to, 444 billion for 10% of just the e-commerce market, then, it could be a massive thing here for not only Solana, but for other payment processors for blockchain technology.
Yeah, no, it's really good. 3 big ones there. And do we want to finish off on touching on PayPal there?
Yeah, so just finishing off on PayPal, they introduced their own PYUSD stablecoin, which is actually built on the Ethereum network, which is good to see. Obviously this is going to be pegged to the US dollar and it's being brought to life with Paxos Trust. I think Paxos were the ones that were issuing Binance's stablecoin. Can happily be corrected by someone there, but yeah, this is just another big thing for, one of the biggest institutions to do with money in the world showing their cards saying we want to be involved in blockchain, in crypto, and it can only give you more confidence moving forward as adoption grows and the market grows. People forget we've only been here 10, 15 years now, or 15 years now since Bitcoin was created, but yeah, it's just another step in the right direction for adoption and growth, and it's really good to see.
Yep, and now something a little bit more, recreational or topical. We've got a lot of transactions at the moment, people who are looking to upload funds to cryptocurrency exchanges from Australian banks. The banks are just saying no, are they? Just putting the doors up. They're not willing to accept it. I mean, just yesterday morning, I tried to transfer a bit into CoinStash, who we've recently partnered with, by the way.
Yep.
And unfortunately, it got barred. Had to call up ANZ, explain, look, I'm just trying to transfer money. I do this all the time. Buy a bit of Bitcoin.
Yeah, it's ridiculous. Really, this has all kind of happened, I think, across this year. But I think officially, as of a couple of weeks ago, ANZ, NAB, Commonwealth, and Westpac, now the entirety of the Big Four have placed restrictions on you depositing money. I think the cap per month is $10,000 that you can send to what they classify as risky exchanges, but you don't get to see that list. And of course, they're probably just placing every exchange, whether it's an Australian one or an international one, on that list, which is kind of sad to see, and then kind of plays into that narrative of the RBA thinking of introducing a CBDC, which is a central bank digital currency for those at home that aren't aware. They've been doing a lot of testing and research into this, so yeah, it's all kind of twisting into place.
Yeah. I'm just thinking, when things start to heat up and there's huge volumes of money going in and out of exchanges, they'll all open the doors back up and want to be a part of it again. But yeah, CBDCs, they've been a topic of conversation for quite some time. There's a bit of, people in the crypto industry thinking, this isn't what we want. It's just the centralized way of getting into our market, I suppose. But we'll see what happens with them. Governments and banks are notoriously slow, aren't they? So
yeah, I think it's one of those things that you can't spend too much time dwelling on and saying, I hate this, I can't believe they're doing this, there's no way they can do this, when it's probably just something that's a reality that's eventually going to happen, because the good side of it is they see how good blockchain technology is and they want a slice of the pie and to integrate it into their own fiat system. Exactly. But hopefully it doesn't go too far, not too many negatives come from it if it does, but I think it's still one of those things that has a long time to play out. They're not going to just come out with one next year or anything. They're going to have to do a lot of tokenization and a lot of research themselves before they ever introduce something like that.
100%. It probably won't be the crypto that we know if they do launch it. But all right, so that's the fundamentals. And again, just to mention, we call this the Crypto Chronicle podcast because the topics that we're talking about, Mitch does some really awesome articles that are all uploaded onto our website. You can go onto the imperialwealth.com/crypto and you'll be able to navigate your way to download or get access to our Crypto Chronicle. It's all hosted on the website. And people like me, I was saying to you, Mitch, I'm not a massive fan of long form content, but you do some really nice summaries there where you can just get the headlines. And, if something does interest you, such as the Shopify integrating USDC payments on Solana or any of these types of topics we're talking about, you can go and research those in more detail and look into the long form content. But let's move on from the fundamentals and let's tap into a little bit of price action and what's going on with the markets there. Finally had a bit of a movement in the market.
I'd say, it reached some of its lowest volatility levels on record recently. For those that have been following price, which I'm sure everyone listening to this has, we were stabilizing at 29K, I think, what felt like 6 months. And then everyone knew that usually these low levels of volatility are followed by very explosive moves in one direction or another, and then unfortunately for us investors, it was to the downside. So we saw, I think on even perpetual exchanges, you saw BTC go from about 29K to as low as 23.5K. But on most spot exchanges, what was important here is that we maintained 25K support. After over $1 billion had been liquidated from the market in 24 hours. So. Since then, really, since that deleveraging crash, we've maintained that 25K of support. We've held it. Then, obviously, since in the kind of last week, you could, whether you're a technical trader or you trade the fundamentals, you can make a few arguments here. As we've been talking about, we had the ETF news, the Twitter news. More often than not, it doesn't matter whether the news is good or bad. It usually all hits at once. So, a few good things rolled in, such as the Grayscale news. Obviously. Twitter news, and then we've jumped back above 27K for now, which is really good. And whilst that's kind of happening around the grounds, the DXY, which is the USD measured against a basket of other currencies, for those that don't know, which has an inverse relationship with the stock markets, and Bitcoin has been seeing a lot of downward pressure in the last couple of days. And so we've seen, the NASDAQ, the S&P, and Bitcoin all have pretty healthy bounces from their support levels. Across the next few days, we've got data coming out in the US, which is integral to how these markets move as well, such as PCE, inflation data. So that could shake up the market some more and get some more expected volatility. And as we mentioned, ETF decisions in 48 hours or so. So we'll see what happens there, whether they get accepted. You can probably expect some pretty nice positive price action, hopefully, if they do. But I think they're most likely to be delayed to early 2024. Just kind of on that, the Trading Academy, as we mentioned at the start of the podcast, were able to get some really nice buys at the lows of the recent crash. And I had to act pretty quickly when I woke up that morning to realise what happened and get a few out to the members. But we're not really fussed in the Trading Academy. All members understand the long-term time horizon that's involved in these markets. You slowly accumulate throughout the bear markets until the bull market comes, and that's when you're selling, whenever all of the rest of retail are deciding to jump in and invest at that time. And then for day trading, members have got a competition going on right now for a couple of prizes. So some students have been nailing some trades and beginning to really learn to trade the market both ways. So yeah.
I mean, it's, we joke just coming into the office for the past month or two about Bitcoin just being a stable coin, right? Yeah. And when it finally does have that volatility on the downside, can be hard, as you say. It happens pretty quick to catch trades like that. Yeah. But it does form those new lows where you can then start to get some longs off or actually start to set up some trading strategies. And you had quite a few successful trades there, didn't you, Mitchell? I think I saw one was 1,000% return or something. So
yeah, that was good to catch that 25K long, and then also short the recent top as well, just as a bit of a hedge against both my spot bags and the long I was running from that. So really good information and education involved in the course to learn how you can do that. So if anyone does have interest in that, feel free to reach out to me or Will or to Taylor.
I've been noticing just the the competence that the guys in that group are starting to develop now compared to when they first signed up and barely knew what leverage was or how to place a trade. They're now starting to post their own charts. They're now starting to get a real understanding of, okay, we understand how important price action is, how important confluence is, all these types of things. So it's been enjoyable to watch, absolutely. And yeah, something that you mentioned before that I was going to jump in and say, it's funny, isn't it, when you're in a bear market and you get really positive news, it doesn't have that, massive bump off the bottom run. But you get one piece of bad news, which is FUD with SpaceX apparently selling their balance, and it just dumps, right? Yeah,
it's funny because even in periods of this year where price has been kind of moving in a bull market sense, is you get bad news. And it was funny when price was kind of going up in a trajectory that the bad news wouldn't have an effect. And I remember thinking, at that stage, imagine if the FTX thing happened, we probably wouldn't have died. We had one of the biggest flush outs and pretty much the biggest one in history, probably besides the COVID crash. They're probably the two biggest, but it is. You're exactly right what you're saying. And then it's funny how the news works and how you can put your tinfoil hat on and think it's all manipulated at once. But to me, it feels like when it's like the other day, the 5 minutes after ETH reached unbelievable lows on the deleveraging crash, the ETH futures ETF got accepted 5 minutes after, and the price went
just nuts, right?
Just nuts. So it is exactly how it goes more often than not.
And these that we talked about earlier, these payment gateways and different things that are launching, Twitter, Solana on Shopify, what the rest of it, if they happen in a bull market, that would have just been, this is huge.
Exactly. I think it's even project specific. Solana's one. I mean, if we were, if Bitcoin was reaching ETHs and it came out that that was happening with the Shopify and Solana partnership, Solana probably jumps 20% on intraday trading. And, the clear one that stands out to me in terms of that is Chainlink and what they're doing recently with their new technology and how their cross-border payments, and they're getting tied in with huge traditional governments and institutions. And, Chainlink is trading at $5.90 right now. It's got an all-time high of something like, $50-$60, so, and if something like that happened that's so big in terms of, global networking and just even stretching blockchain technology that far, it'd be crazy, the price reaction. But
if that happened in a bull market, just boom. But no, that's really good. So good to get some price action updates in there, and just good to see some actual movement in the market. So we'll wrap things up by just tapping on the mining market. Obviously, a large amount of our client base and probably most of the people that are tuning into the podcast are miners. It has been a little bit slower, as bear markets notoriously are for miners. But it is important to look at the landscape as a whole and understand what your strategy is. When you get into mining, you're not really looking at daily profits. What am I earning today? It's about over these 4 years, how much Bitcoin can I accumulate, and looking to sell that at a later date. And one of the main components of profitability with mining is the cost of hardware, of course. It's a really important thing to look at, and that's what I'm personally looking at right now. Whilst a lot of those retail miners are probably looking at, the profitability is almost break even, maybe you're making $1 or $2. Well, I'm looking at, hardware costs are about 30% of what they used to be. What can I pick up now? Obviously, picking up energy efficient miners is also really good, and can set you up in the long term. And we've also seen some of the Casper miners come out that we've created some videos of and been sharing those on our socials. They were doing some pretty crazy returns when they first arrived, north of $100 a day. That was a bit of fun. But one of those miners is the KS0. It only uses 65 watts of power, which is pretty much negligible. It doesn't use power really. You wouldn't be spending $1 even a day to run that. And I think that one's actually a really, really good entry level miner. Casper, what it's done about 1,300% gain this year.
Yeah, I think it's had as good as 1,300%. Seeing a bit of a pullback with altcoins recently, but I think the chart looks quite healthy
And the market cap's still very small for this coin too. So depending, where you're at with the investing, if you've got a few Bitcoin miners, this is what we did. We bought some of those Casper miners, especially the KS0s that we know we can run in the office and not have too much of a power bill. Accumulate some Casper. I think those were still earning around about $8 to $10 Aussie. And yeah, just getting exposure to more of a micro cap coin. So that's all I have really to comment on the mining side of things. Obviously, looking forward to Bitcoin going up to realize those coins that we've mined.
Yeah.
But that will probably wrap it up. About 25 minutes of the first podcast.
Yeah. So it was good. So yeah, just to recap is that every Tuesday night or afternoon, the written Crypto Chronicle, if that suits you more, that gets released in our Discord, our Telegrams, our Twitter, on our Instagram story. I think it even gets emailed out to certain people. So if that's more your style and you don't have 25 minutes to listen, but you've got 5 minutes to read, as Will said, the article's all summarised there in less than 100 words each article, with the full link if it interests you more to fully read the article. And then I do a quick brief overview of the market. Might show 1 to 2 charts and just what's happened in the last week for Bitcoin price action and a bit of altcoins and whatever else is happening in other markets. And then we briefly go over what's happening in the miner industry as well, and what miners look good for our customers to buy. So if that suits you, that gets released every Tuesday night, and then every Thursday we'll be releasing this podcast to have a great chat about everything in there.
Recap it all.
Yeah.
Very good. Thanks for tuning in, guys, and we'll see you next week.
Thank you.